Hi, I'm Andrew Howard, Chief Investment Officer here at Equip Super. Welcome to our September quarter investment update. Let's take a look at the latest results for our investment options. I'm pleased to report that the September quarter delivered positive returns, with our default My Super option returning 4.1%, resulting in one-year performance of 11.06%. If you're in our higher growth options, the results were even stronger, with the Growth Plus option returning 5.42% for the quarter and an exceptional return of 14.01% over the year to September. What drove those results? Well, global share markets have been strong, particularly in the US, where technology companies are leading the way. The S&P 500 rose 3.7% in September alone, its best September in 15 years, thanks to renewed enthusiasm in the technology sector, particularly artificial intelligence. Companies like Nvidia and Oracle surged, following major investment announcements tied to OpenAI, reinforcing the market's confidence in AI as a long-term growth driver. For the quarter, global share markets delivered a return of 7.7%, continuing the rally we've seen since April. What does this mean for your super? These global trends have flowed through to your investments, helping deliver positive returns across our investment options. On the economic front, the US Federal Reserve cut interest rates for the first time this year in September, responding to signs of a cooling labour market and persistent but manageable inflation. This easing stance supported housing activity and also contributed to positive investor sentiment that led to the continued upward trajectory in equity markets. Here in Australia, the Reserve Bank also cut rates to 3.6% in August, its third rate cut this year as inflation moves closer to target. Australian shares delivered a solid 5% return for the quarter, with the materials sector performing strongly. Global growth is holding up, but there are challenges ahead that could impact markets. The US economy grew at an annualised rate of 3.3% in the second quarter, driven by strong consumer spending and businesses acting early before new tariffs kick in. These include new US tariffs of 25% on imported heavy trucks starting November 1 and 100% on branded pharmaceutical products unless manufacturers commit to US-based production. While these measures aim to protect US domestic industries, they've also raised costs for US consumers and businesses. The concern remains that tariffs may add to inflationary pressures, which could in turn affect trade balance, manufacturing output, and central banks adjusting interest rates. What's next for markets, and what does it mean for your super? There are a few risks on our radar that we're keeping front of mind. We expect some ups and downs as markets adjust to changing central bank policies, geopolitical risks, and the impact of tariffs. The AI-driven rally in US tech stocks could slow if current heightened valuations are not supported by continued robust earnings growth. Here in Australia, economic resilience and stable policy could support equities remaining at current levels, particularly in sectors like domestic spending and infrastructure. Here's how we approach investing to help manage risks to your super. We diversify across asset classes, sectors, and geographies to reduce concentration risk. We actively manage our investment portfolios and respond to changing market conditions while also identifying new opportunities. We allocate to defensive assets, including exposure to bonds, and mid-risk assets, such as infrastructure. And we have a long-term focus, ensuring short-term noise doesn't derail long-term outcomes for your super. Our priority is simple: to grow and protect your retirement savings. Thank you for trusting us with your super. We'll continue to keep you updated and look forward to sharing more next quarter.